what are you bidding on? For example, if I take this newspaper again and I open it up and I just go like this, touch my tongue and I go like that, what did I get? I don't know and you don't know.
Before buying tax liens, it's important to have a good understanding of how they work and benefits involved. Today, Ted Thomas, who is the Tax Lien Certificates and Tax Deed Authority, will be giving you key points you need to know before investing. Ted, first important thing to know before we get into this video is, what is a tax lien certificate?
A tax lien certificate is nothing more than a piece of paper. I'm going to hold one up so you can see what it looks like. It's nothing more than a piece of paper. But what it really is, it's a claim that the government, the local county, has against the property. Now, what does all that mean? Well, let's start out with the basics. The basics are this. All property owners in the United States must pay property tax. All right, so each of the legislature in each of the 50 states has rules. So the legislature runs the government from way up above, okay? They make the rules, they push the rules down to the local county. The local county then has the job of enforcing and administering the rules. All right, so what are the rules? The rules are simple as this. If you own a property, you must pay your property tax. So in half of the states and half of the counties, those are what I call benevolent states and counties. And those benevolent counties say, look, if you didn't pay your tax, we're going to make a claim against the property. When they make a claim, they make a tax lien certificate. It's just a claim that the local government has against that property. Now, why do they make that claim? Because they want to get paid. So the local government doesn't have money, so they print these tax lien certificates, and anybody out there that wants to can buy them.
Now let's talk about interest rates. Who determines the interest rate per state?
Okay, the legislature of the state makes all the rules. However, all the enforcement and all the administration is done right at the local level. The Board of Supervisors, or the county commissioners, authorize the treasurer of the county to set the rate and to set the time. And that's all done by the treasurer. So when the state sent the rules, they sent them down. There's no reason for that treasurer to change that. So if they said in Florida it's X, then that's what it's going to be. They say in South Carolina it's X, then that's what it's going to be. But that all started at the state level, but it's all going to be enforced and administered at the local level.
So how is the interest rate for tax liens calculated? Is it annualized?
Well, it is annualized. It's annualized to the point where a place like Florida, where they have an 18% rate, they divide that by 12 months. So it's 1.5% for every month. So if you bought a certificate today and the people paid it off in, say, 120 days or 4 months, you would get 1.5% for each month that you own that certificate.
Let's look at redemption periods. Is there a time limit on when these tax lien certificates can be paid? Can you please tell us, is there a typical redemption period?
Well, nothing's typical in the tax lien and deed business. It's going to be whatever the state legislature said, and then the local people are going to administer it and they're going to enforce the rules. But redemption is basically nothing to do with the church now. Redemption simply means the property owner is going to come forward and pay to get their tax lien certificate removed. In other words, the tax lien certificate was sold to someone, whether it was me or anyone else that wanted to buy a tax lien certificate. Okay, they want the certificate back. All right, so what they basically do is they come forward and they redeem it. That means they paid, and the person that owned the certificate now gets their money. They get all their money paid back to them, plus whatever number of months it was outstanding. All right, so what is that redemption in terms of months? Well, in Arizona, it could take 36 months that the person could wait before they had to redeem. In Florida, they could take 2 years to do that. In South Carolina, they could take 1 year to do that. So it's going to depend upon the state, and that's why you want to go to the county records. They'll check the records and tell you whether they sell tax liens, tax deeds, or both. And they'll tell you what the redemption process is for that state.
What happens if the homeowner doesn't pay after that redemption period?
Well, if the property owner doesn't pay, then the property owner is going to lose their property. In the United States, it's a privilege to own property, and it's a privilege to pay taxes. So if you don't pay your taxes, that means you're forfeiting your rights in the property. You're forfeiting your rights. So you have not paid the taxes, you have forfeited the right. So what the county will do to give you a second chance is they'll issue a tax lien certificate. And then that will go through a whole redemption period. Like I said, could be 2 years in Florida, 3 years in Arizona. All right, it'll go through that whole redemption period. If you don't pay then, you will lose the property, and whoever owns that certificate will now get the property.
Okay, let's look at the due diligence. You know, some people mistakenly believe that when they buy a tax lien certificate, they can skip inspecting the property itself. Ted, can you please tell me about the potential risk that can happen if you don't inspect the property, even if you're purchasing a tax lien certificate?
Okay, well, thousands of people want to buy tax lien certificate. Absolutely thousands of them. So, example I'm holding up now, this is just a newspaper with a list of tax lien certificates. There's about 30,000, 40,000 certificates on this particular list. I'm just going to open it up and show you. There's no pictures in this newspaper, so I'll just show you one page, put it in front of my face. All right, so this paper has 100 and something pages, almost 200 pages. All right, thousands and thousands of tax certificates. All right, now, when they're selling a tax lien certificate, they're selling a piece of paper. They're not selling a property. They're selling a piece of paper. And if you want to buy that, all you have to do is raise your hand and bid on that certificate. All right, now, what are you bidding on? For example, if I take this newspaper again and I open it up and I just go like this, touch my tongue and I go like that, what did I get? I don't know and you don't know. So you don't want to buy anything unless you've seen it. Now, I'm very fond of saying you wouldn't marry the woman if you hadn't looked at her. Well, women are smart. You know, they would not marry the guy for sure unless they had looked at him. So you don't want to buy a tax lien certificate. Why? Without looking at it, what if there was a hurricane? What if there was a flood? What if the building, if there was one there, burned down? Okay, what if there was a pig farm next door? I mean, those are all things that could happen that would affect whether that building or that certificate had any value. So you could raise your hand and you could buy that certificate. And I can tell you, when you do that, across the table, you're going to hand money to the county. They are going to keep your money and you're going to end up owning whatever's on that property, because you're not going to sell a property that's been burned out. You're not going to sell a property next to a pig farm very easily. And what if there's a hurricane that blew it down, or there's a flood or whatever? So you really want to think before you raise your hand and buy anything at a tax defaulted tax lien auction or a tax defaulted auction.
Okay, let's get into the auction process. When attending a tax lien auction, what's the most common bidding method used to purchase these certificates? Let's use Florida and Arizona as an example, Ted.
Okay, if you want to buy a certificate in the state of Arizona, they'll have, depending upon which county you buy it in, they'll have, like Maricopa County, which is Phoenix, they'll have 25, 30,000 certificates available. Some of the small counties only have 1,000 certificates. All right, so when the bidding starts, in Arizona, it will start at 16%. The state said that's the highest they'll pay. Then the next bid would be 15 and a half, then it'll be 15, then it'll be 14 and a half, 14. In other words, it would bid down. Okay, now that process could take hours because each one of the properties has its own time in the sun, so to speak, and the process go down. All right, now they do it online, so they make the process even easier, because you can go from 16 right to 5 if you want, or 2%, whatever you want. It's a bid down process. Okay, Florida is similar to that. There's a bid down process, whereas South Carolina, it's a bid up process. So you need to read the rules. If you haven't read the rules and gone to the county and looked at what the process is, then you shouldn't be attending the auction until you understand the rules and how the auction is going to take place.
Last, we're going to cover cost. So you're not buying a house. So what is the average price range for a tax lien certificate?
Well, average price range. Well, let's go to a very wealthy community like Miami, or go to Broward County and Fort Lauderdale and those places. The average home there is $500,000 or more. All right, so if that's the average, then the certificate is going to sell for at least 1% of the average price. So somewhere between 1 and 3%. So that certificate could sell for anywhere from $5,000 to $15,000 for that one certificate. Taxes generally are 1% of the value. So if you had 500,000, so you can see 1% of that would be the minimum. And what if it's in default for 2 or 3 years? So you're going to have to take and add those together to know what that number is.
Look, folks, if you have any questions for Ted, his team monitors the comments below this video and you'll get the answers. And please take a moment to like this video and subscribe to our channel. You know, Ted, it would be really nice if there was some sort of a calendar when all these auctions are happening, when they're happening, the times, the places, etc., etc.
Every county will have their own auctions when they want to have them. But how are you going to keep up with 3,000 counties? Well, you could use the newspapers. That would mean you'd have to get 3,000 newspapers to keep up with what's going on. So what we did is we created an auction calendar. So electronically, and you can see it right below me, electronically, and that'll take you to the auction that's going to take place sometime in the next 60 to 90 days. You'll now tap into that county. You can find out how many properties are going to be at that auction, and then you can start your research process. It's right below me.
I want to thank you for your time, everyone. Thanks for watching. And Ted, thanks a lot for all your information and your wisdom. Look forward to seeing you folks next time. Bye for now.